Hi, this is Paul from globaltrainingsoftware.com. This is a follow-up video. I did a live stream about a month ago with AJ Brown and we looked at a few stocks. I did the technical analysis, looked for those potential Elliott Wave, fifth wave moves, and this one in particular, VET, AJ was looking at particular options plays, but he actually agreed with me that this would be a stock play because it's cheap and the options weren't too great. What I'm going to do is put the link to this portion of that live stream for VET in the description of this, so you can go and see how I set this up and then everything else. But one of the things is nothing ever goes plain sailing here, so I just want to go through this now and follow up. It did hit the fifth wave target zone. The trade was good, but the setup was a little awkward. We made the video at this point here, 22nd of November, when we found good support around the center line. We did start to move up here, and then we gapped down. We had this this doji down here where we gapped down and we gapped up the following day, so we got a new wave 4 low. It doesn't detract from it's a good looking setup, but when that happens we need to adjust stops, entries, all that sort of thing. So it wasn't plain sailing, but you have to adapt as traders. Things happen. You know, this pre-market here obviously put the price down. There was a green, you know, it was green, so we did close near the highs that day, and then the following day we gapped up and we continued that move up. So there was some news pre-market that made institutions sell some of this stock, and that's why it gapped down. But even more institutional traders the following day pre-market saw this as great value and started to buy, and that's why it gapped up again. So on the original video, this was the support in our amber zone on the Elliott Wave indicator suite there, around about 80% probability hitting this fifth wave target zone. This new wave 4 that was printed on that gap down, that's an island type doji, so that's on its own. That's a real good, when we get that day gapping up the next day, that's a real good sign we're going to continue there. So we had to adjust the stop, the entry, and that's where it was. 10.17 was the entry this time. 10.09 or something before. 10.10, you know, is pretty much the same as where it was, but we just had to adjust our risk to reward because the stop was much lower than wave 4, but it did enter, it did go in. And one of the things we have to do when we're swing trading these stocks, it's a cheap stock, it will move. So we did have that nice move up there going into December. We found some resistance, and I did mention that in that original video that, you know, all of this clustering around this sort of point, or even this wave 3 pivot, would act as resistance. And what we're looking for is that to pull back down, find a higher support zone, which it did, and then we start to move up. But one of the things I like to use when I am managing this trade is something called the manager. So what happens is we've got different colored candles. We've got a green candle, which is an up candle, and that is higher than the previous candle's volume, so we're getting accumulation of buyers. A gray candle is an up candle, but it has less volume. A red candle has more volume than the previous candle. It's called a distribution candle. You see here we've got red, but that rejected those lows. Then we had another red candle here, then another red candle here. So each day there was more selling volume. Then we got these dots up above and below. So one's up above, this is higher than average volume. One's down below or lower than average volume. So one of the things I look for when we have a pullback against our trade is, although we're getting distribution candles here, the volume's increasing, we're still lower than average volume. Then this candle here rejects those lows. That's a 618 retracement on the day there. More. We opened, and then it just goes all the way through, look, and closes near the high, higher than average volume. It's a green candle, so it has more volume than this previous candle. It's bullish engulfing, it's higher than average volume, it rejected those lows. That's a great sign. Couple of average volume days, and then we get another higher than average volume day here, another engulfing day, and then it just goes hell for leather all the way there. So the main thing is is not to panic when we're using the manager. The trade setups are pretty, this one was a little bit more difficult. It gapped down, it gapped back up again. We need to adjust, not a problem. As sophisticated traders, or even really beginner traders, you should be able to spot that as long as you've got a decent risk reward, 1 to 2. On the original video it was 1 to 3, so we still got a decent risk to reward. We still got to go for it. But managing the trade is really important. Understanding this pullback is lower than average volume, and then we get higher than average volume rejections of lows, and then it just goes for it hell for leather. And then going into Christmas on the 23rd of December on the short trading day, we hit the 5th wave target zone there. Not a bad time to take profit there, because I'm making this video now the 27th of December. This week's going to be pretty low volume, so for those that took the profit on that, there was nothing wrong with that at all. I just wanted to go through, follow up there, because I do make these signals and educational videos, and this one with the link there was a live stream with AJ, and not everything's plain sailing, and in this case we just had to test it, we just had to adjust, and then once we're in the trade, managing it is very, very important. But it hit the target zone. That's it's one of the things that to build confidence in a particular strategy, like trading that 5th wave when you swing trading stocks, is to see those targets hit. Yes, learn from the price action and the behavior before, and we had to adjust those entries and those stops and adjust that risk reward, make sure we got enough fresh air. But you can't be scared to do that. As a trader, nothing is black and white. Nothing is so simple written down that it happens every single time. That's not the real world when we're trading and investing, whether that's day trading, swing trading, scalping. Nothing behaves the same, exactly the same every single time. What we need to do is adapt, still stick with a very sensible entry strategy, good risk to reward, but at the end of the day, having the confidence in that 5th wave move with Elliott Wave, it's the highest probability move in any trend, and the more you see these targets hits, the more confidence you'll get in, the more time you can spend on those entry strategies. Hopefully that helps. Speak to you all really soon.